Hi everyone and welcome to Just Jackie April edition. Firstly, some mortgage broker info from the Mortgage and Finance Association of Australia. Did you know that 71.8% of all home and investment loans are written via a mortgage broker's advice and service? This is a big market share and worth a quick unpack before we jump into the April update. So, this question has probably passed through your mind at least once. Why not just go directly to a bank for advice? For me, the key is the separation of product from advice. When you're making travel choices, the research and planning before picking a destination and then the journey to that destination is invariably the most important part. You can't just hoist a sail and set off, even though Boothie likes to think he can with the amount of time he spends sailing on his days off. But anyway, this is just like the advice process when dealing with property and debt. Your lending advisor is your partner in planning and preparing for the journey, and your guide along the way. They are the expert. They have access to multiple lenders, they can save you a lot of time and effort, is personalized advice, and they will save you, the borrower, money. They are your partner in an ongoing advice relationship with you. If you're in need of a lending advisor, click the link below and we'll line you up with the perfect lending advisor for you. The Reserve Bank of Australia's policy is to target inflation between 2 and 3%. The most recent inflation number for January is 3.4%, falling from a high of 8.4% in December 2022. So if this momentum continues, we will see the inflation number fall into this band hopefully over the next few months. The RBA has also highlighted that there's a lot of uncertainty in the economy and the growth has slowed down. Inevitably, the Reserve Bank of Australia will need to reduce interest rates in order to stimulate economic growth, but the exact timing of this decision is uncertain. The current interest rates, such as the 90-day bank bill swap rate at 4.34% and the one-year Treasury bond at 4.05%, indicate the financial markets are anticipating rate cuts in the near future, which will be a relief for many homeowners and borrowers. But you know what? Those numbers are confusing, so best to get in touch with your lending advisor to help you navigate. As for lender interest rates, they're all pretty steady at the moment, with no news, good news, and stability for our borrowers in comparing good and bad interest rates. I want to know, have you ever considered our Mortgage Monitor service? It's a great way to better understand your own interest rates and receive help in getting a better deal at your ongoing existing bank. Get in touch to register because we are saving thousands of dollars annually for our clients. Now looking to our favorite home lending interest rates. Move Bank has a principal and interest variable rate of 5.94%. There's also Adelaide Bank's Smart Saver principal and interest variable rate of 6.09%. And lastly, Move Bank with their offer of a principal and interest 3-year fixed rate at 5.79% with an offset account. As for investor lending interest rates, Heritage Bank is offering a principal and interest variable rate of 6.24%. There's AMP with an interest-only variable rate of 6.49%, and also Bank of Queensland interest-only 3 years fixed at 6.09%. This week we had an awesome chat with Judo Bank. If you're a business owner aiming to finance growth, change, or acquisitions, these guys provide credit assessments tailored to your needs. Plus, they don't require property as collateral. Instead, they focus on your business's cash flow and overall viability. If your business could use some extra cash or capital, get in touch with us and we'll help you explore your options. And just a quick property update before we finish, the CoreLogic Home Value Index increased by 1.6% in the March quarter, adding around $12,000 in dwelling values. This growth continues a trend of 14 consecutive months of increasing housing values, with every capital city except Darwin seeing a rise in dwelling values. It's all on positive territory right now, with undersupply keeping prices stable and auction clearance rates are sitting above 60%. And that is everything for the April update of Just Jackie. If you have any particular topics you'd like me to cover in the next update, please be sure to get in touch with us. Enjoy the rest of your April and I'll see you next month.